Things that have been clarified is that the White House does indeed support or endorse some crypto strategic reserve, and they endorse holding assets outside of Bitcoin. When does this happen? What is the magnitude? And what are the criteria for the assets that they're going to include in this reserve? It doesn't take much to, say, move back to that 150, 175K level by the end of the year, and Bitcoin will be the fastest horse once again.
Welcome to Global Money Talk. Today, we're delighted to have Sean Farrell, Head of Digital Asset Strategy at Fundstrat Global Advisors with us. Sean, great to see you again.
Thanks for having me. Great to be here.
Well, I think we should, a lot to talk about today, but let's get the elephant in the room out of the way immediately. Trump's Truth Social post over the weekend. You take a look and like, what just happened? So what do you make of that?
Yeah, right now, not much. I think obviously there was a low liquidity Sunday squeeze that transpired yesterday, and we saw a pretty violent reaction to the upside in a lot of names. But we're still left with more questions than answers. Among those questions, I guess let's start with what's been clarified. Things that have been clarified is that the White House does indeed support or endorse some crypto strategic reserve, and they endorse holding assets outside of Bitcoin. At a personal level, I think it's a little silly, but that is what we're working with. But the questions that still need to be addressed are, how do they actually execute on this reserve? When does this happen? What is the magnitude? And what are the criteria for the assets that they're going to include in this reserve? Now, we might get those answers this upcoming Friday at the White House Crypto Summit. But until there's more clarity around things, really not much has changed.
I guess it was a Sunday squeeze. I mean, Bitcoin, I think 78,000 the low, 95,000 the high. Solana must have been 130 to 170 or something like that. I don't follow some of the other coins, but from what you're saying is it sort of perked everything up, and there was a sort of a low liquidity squeeze on a Saturday or even a Sunday. It's the only truly 24/7 market. How thin is it actually on a Sunday or a Saturday, comparatively, on a comparative basis?
Aggregate spot volumes are anywhere from, it depends, it varies, but aggregate spot volumes are anywhere from, I would say 20 to 40% of what we see during the weekday. So, order books can be considerably more thin. And I think just broadly speaking, we were coming off of a few weeks of fairly negative price action. So, we probably had a decent amount of short positions that were aggregated and taken out, right, on the news. I think that was a big contributor to price action. That said, we did see some very interesting signs of capitulation that preceding Friday, right? So perhaps that helped out the bid on Sunday. But overall, whenever you see price action like that over the weekend, it's not to say it's not organic, but you just have to understand that there's less capital at play over those during the weekend.
It sounds like, from what you're describing, with all the uncertainties, along with when, how much, which coins, and it sounds like it should be. It's a big bounce up to 95,000. Then it sounds like until we get some clarity, we should probably, range trade somewhere in between that 78 and the 95.
Yeah, I generally agree with that.
Do you think, as a result of this, do you think we've seen a short to medium term low?
Short to medium term low. So we hit 78 on Thursday night into Friday. I forget the exact day and time, but it was within that general time frame. I am not super confident that we break that low, but I could definitely see a world in which we revisit it in the near term. I think we've been we'll call it tactically cautious since the start of February, when a lot of the trade war fears started to permeate through both traditional markets and crypto markets. I think it's become apparent that Trump is serious about using tariffs as this bludgeoning tool to negotiate better trade policies with partners. And as a result, it's been tough for crypto specifically because this is an asset class that, well, it does well when financial conditions are easy, and does well when there's just more confidence from a growth perspective and from an inflation perspective, and during a more Goldilocks regime like we had for the better part of last year. But it also leverages momentum-based capital, and if you have a lot of traders that that are normally trend following, and there's a lot of headline risk around tariffs and trade, that capital is less likely to participate in markets, and that can certainly work to put some water on any rally, right? Or it removes some tinder from any rally. So it's just been a difficult environment. On top of that, on the backside of that, we also had so a semblance of a growth scare that isn't completely independent of a trade war, right? Because tariffs are on the back end of them, negative growth. But I think a lot of the dialogue from Trump and Elon around Doge and fiscal constraint, coupled with that trade war, it's just been an overall very difficult environment for crypto. And I think that those views kind of came to fruition over the past couple of weeks. And until we get a clearer picture on our path through those risks, we're probably going to range, as you referenced, probably going to range between that 78, 90K level. Now the good thing though is that crypto normally prices in risks and opportunities before other asset classes do. That's why we saw alts, puke before Bitcoin. That's why Bitcoin, started to roll over before equities. And so we're likely to see a bottom in both alts and Bitcoin before we see a bottom in equities. Now that might be in place. I think I haven't touched base with Mark on his views on a near-term bottom, but I do think it's possible we're getting there. But we have some work to do before we talk about making new all-time highs. At least again, these are more tactical views.
Right. Now on Polymarket, the likelihood of a Bitcoin reserve in the U.S., I guess, jumped from 42% to 60% for the balance of 2025. Mm-hmm. It seems a little optimistic, 63%. What's your view on that? A little too high?
Yeah, I guess it depends on how that market is settled. If that market is settled, if they just hold any Bitcoin.
I think it's if the government holds any digital asset.
Okay. Because I know there was
an investment, not as because they got they took it from a criminal or something, I guess.
Okay, so that's a caveat. They do. So the DOJ has seized a lot of Bitcoin, and the U.S. government does own a lot of Bitcoin through those asset seizures. I think there is actually a high probability that at some point this calendar year, the Trump admin comes out and says they will not sell that. And if we are counting that as a strategic reserve, I think that Polymarket is underpricing that. If that market settles, only if they announce or actively purchase, additional Bitcoin, I would say that's probably overpriced. I'd probably want to see that closer to like 30%.
Okay.
I'm definitely more, and this was kind of our view towards the beginning of the year. I'm more bullish on progress on strategic reserve at the state level, where states can actually leverage their fiscal surpluses to invest in assets like Bitcoin, as well as among other nation states.
Which states are seriously thinking about that?
I don't know.
Okay.
I don't think nation states are going to be super public about that bid until they're actually until they've actually acquired the Bitcoin. But I think right now we have two countries or two or three that are confirmed to be partaking in this Bitcoin Strategic Reserve Initiative. You have El Salvador, you have Bhutan, and I could foresee a world in which you continue to have smaller nation states take up this initiative. But I also think that really any country that is rich in natural resources or is has a lot of USD denominated debt is going to be very interested in engaging in this endeavor. I mean, you have Bhutan, who has a lot of natural resources, and they utilize them, they monetize them via Bitcoin mining, and they hold on to the Bitcoin that they mine. I'm sure they sell some to pay down any incremental expenses, but that makes sense for a lot of natural resource rich countries. In addition to that, I think a lot of countries can just apply the same framework that they do to gold. Before we started this conversation, we were talking a bit about the emerging market, central bank demand for gold, and I think there are a lot of structural tailwinds for gold over the long term. And should countries pair their investment thesis on gold with the fact that the U.S. is seriously considering moving into or starting a Bitcoin strategic reserve, I think that sets up for high likelihood that we see more countries start to add Bitcoin as this strategic reserve asset on their balance sheet.
Do you have just a sense of, in terms of Bitcoin that the government has seized, how much they're holding?
Yeah, I think they have about 200,000 Bitcoin right now, maybe 208,000.
That's a lot.
Yeah, it is a lot. And they used to have more. They sold a decent chunk of it. They haven't sold any in a few months, at least not since, I think, November. And I think if you aggregate all of the Bitcoin held by all the countries worldwide, the vast majority of it is via, it's been acquired via asset seizures through criminal proceedings. But in aggregate, nation states worldwide hold about 2.5% of all Bitcoin that will ever be mined. So it's already a pretty substantial amount.
It is a pretty substantial amount.
So if you just have countries decide to hold on to their Bitcoin, and then have more countries decide to perhaps acquire some, that could create quite a flywheel effect.
If the U.S. government were to announce that we're not going to sell any of the Bitcoin that we have seized, that probably at least short-term bullish for the market.
Yeah, I think so. It certainly takes away a large supply overhang. Now, I will say, I think the market likely feels the same about the odds of that happening as I do. Mm. And so just how much upside is left to be had if they do make that announcement, I'm unsure of. It could be just priced in at this point. But irrefutably, it would be a very, very good thing to see and a very good thing for Bitcoin, and I think a very good thing for the U.S.
You think about it, and at first, I think the first time I heard it, I thought, this is so, we want that. But you have Bitcoin, which there eventually is going to be 21.5 million of. They're not going to make any more, unlike gold, where you can mine more, and I suppose eventually if you could get it on an asteroid, but they're not going to make any more Bitcoin by the structure of the coin. And if the U.S. were at some stage the idea was to hold maybe 1 million Bitcoin, I read somewhere, then it's 5% of the total supply forever, and exactly what's going on in that market. It seemed, and likely to appreciate. It seems like actually a really solid idea amongst other assets that you might hold. It seems really, why wouldn't you, in a way?
Yeah, I mean, it's that's a good way to frame it. Why wouldn't you? I think people understand gold. The only thing that Bitcoin is lacking right now is what's known as the Lindy effect, right? It hasn't been around nearly as gold's been around for millennia. Mm. Bitcoin's only been around for 15 years or so, but Bitcoin is far superior than gold in every facet. It's more scarce, as you just alluded to. Gold I think has like a 2 to 3% inflation, annually. They're always finding more gold miraculously, whenever the price goes up. And it's more easily transferable, right? I think, one of the things you're seeing in the gold market is, lease rates are going up, and it's clear that, banks are having trouble. I'm not privy to the actual details of what's going on under the hood, but it's clear that there is a mismatch between physical and the futures market, just based on some of the funding rates in the gold market that you're seeing. And with Bitcoin, I don't think you would have that because, the big preventative factor in matching the paper and the physical market in gold is the expensive carry that gold has, right? It's heavy. You have to ship it on boats. Bitcoin, you don't have to do that. And not to go back to the trade war stuff, but it's clear that the current administration wants to move to a more multipolar trade environment where neutral, non-sovereign monies should do well. And, in order to actually reshore manufacturing, it's going to require additional fiat debasement, right? You need a weaker dollar in order to actually make it economically viable to reshore manufacturing. And so, while I did just mention all of the headwinds related to the trade war and the growth scare, et cetera, right now we're setting up for a very bullish time to own Bitcoin once we get through this morass.
Are there any other coins or substantial coins other than Bitcoin where the supply is limited? Like there is an upper limit above which you can be no more?
Yeah, there are. There are plenty of coins like that. I think what makes Bitcoin different is its proof of work properties. It actually links, energy expenditure with the security of the network. It's more Lindy. It just is worth a lot more, right, in value. And at the end of the day, it's actually not necessarily, I know it's going to sound silly, but it's not necessarily the scarcity, the 21 million cap that makes Bitcoin valuable. Well, it is, but even more so, it's the fact that it is very, very hard to change that cap, right? In a world in which all of the Bitcoin nodes decided that, Bitcoin needed tail emissions. I don't think that would necessarily kill Bitcoin or kill its value, because you would have this immense decentralized network of nodes all coming to agreement on this very hard problem, and solving this problem. And the fact that it's very hard to change the Bitcoin network and change the supply, the emission schedule, that's what makes it so valuable. And all these other networks that perhaps might have a supply cap, they don't have that, right? They don't have the number of nodes. They don't have the history. They don't have the network value that Bitcoin has. So while anyone can mint a coin with a capped supply, it can't necessarily replicate everything that Bitcoin has been through and just how decentralized it is.
Right, it's sort of like a first mover advantage, and it was built well, and the idea was sound, and that's a good point. In terms of when we spoke in November, you had mentioned a sort of my great surprise that previous administration really had a rather sort of Bitcoin or digital crypto unfriendly bent to it in terms of essentially cutting off funding for a lot of crypto. In the 6 weeks of the new administration, have you seen changes, substantial changes that have been done or in the offing that makes you confident that the harnesses from the previous administration is going to go away?
Yeah, absolutely. I think look, despite I think a lot of the optically unpalatable things that Trump and his his team have done, like the meme coin stuff, this tweet the other day that we're still trying to decipher, perhaps some other stuff here and there, like the world liberty stuff. At the end of the day, I think his election and the results in Congress have been an enormous long-term tailwind for the space, and the results have really met or exceeded my expectations. I mean, you start with the executive order that the White House issued, just a few days post inauguration, and it covered all of the points that were made on the campaign trail, ranging from, developing rules around market structure to supporting self-custody and the ability to mine in the U.S., among other things. It also formed this presidential working group that's currently headed by David Sachs. It's going to put their heads together, take 180 days to figure out the best way, the White House's recommendations for regulating crypto. You also have key agency positions have all been, friendly towards the industry. You have big changes from the SEC already taking place. We've gotten rid of SAB 121, which I think was, a massive restraint on the industry because it essentially prevented banks from custodying crypto assets. And that's already been rescinded by the current SEC. And, as a result, we're likely going to see banks start to move into the crypto space, which will be great to have them as proponents of crypto-based innovation. In addition to that, in Congress, we have market structure, several variations of market structure and stablecoin bills that are being worked on and trying to, there are solid individuals with the crypto space in mind and innovation in mind that are trying to push those bills forward through the House and the Senate. And, I'm pretty excited about that. So, I think it's been a very positive outcome for the space.
You just mentioned stable coins, and could you explain a little bit for our viewers, the stable coins, the idea of the stable coins, one of the main ones, and why they're important for the space?
Yeah, so
briefly.
Sure. So without getting into the history of the banking market structure and how deposits work, et cetera, a stablecoin in very simple terms is just a token that is anchored to the price of something else, and this token is tradable on chain. The most popular stablecoins are US dollar stablecoins. I think there are something like $300 billion of US dollar stablecoins. There are some, British pound stablecoins. There are some, other currency-based stablecoins, but right now it's mostly US dollars. And these are important because, like I just mentioned, the way you would transfer $1 to someone else from your bank account, it's much more difficult than transferring $1 from your digital wallet in simple terms. Because what happens when you transfer from your bank account is you have to, agree to say you're sending $1 to someone else. And then the bank underlying that needs to also send those reserves to that other bank. Meanwhile, there's a lot of, administrative work that has to happen to facilitate that transaction. It's slow, requires a lot of, there's a lot of KYC and AML type procedures that are implemented to, that really reduce or inhibit the user experience. With stablecoins, it's very simple. You have a token in your wallet. The reserves are held with a centralized entity like Circle or Tether, and you send that stablecoin to someone else anywhere in the world that has a digital wallet, and it arrives there in a matter of seconds. And importantly, those reserves don't have to move. They just stay there, right? And so it's important for two things. I think one, stablecoins are, they're pivotal to, so we'll talk about the fundamental value or the real world value that they have provided is that they're very popular in emerging markets. So we talk about Bitcoin as this inflationary hedge, but we often forget that stablecoins are, or the US dollar rather, is coveted by, I would say the vast majority of countries, right? If you hold your wealth in the Turkish lira or, any number of South American currencies, you understand why it's important to hold dollars instead of, that your local currency. And we've seen very solid traction not on a speculative level by any means, within, countries in South America, countries in Africa, where, they just have a smartphone, and instead of, holding their native currency, their local currency, they store their wealth in US dollar stablecoins. And, so an extension of this real world use case is that stablecoins help to extend US dollar dominance overseas, right? Because you have this quasi or this new euro dollar market that is opening up, where you have these US dollar deposits that are owned and traded overseas. And so, I think that stablecoins are a great innovation that that crypto has brought about. And, I am hopeful that we're going to get, sound legislation that will promote their proliferation even more so.
Oh, that's fascinating, because so in one fell swoop with a stable coin, all you need is your phone, and you've actually can bypass literally the entire banking system of your local country. Depending on what country it is, that might not be very well developed, might be very expensive. Question: are stable coins exchangeable for, like, is one stable coin typically exchangeable for, like, somebody's fiat currency? Are they backed by something?
Yeah. So, great question. Stablecoins are they're backed by reserves, and most often these reserves are, short dated. Short dated, T-bills. Some mix of U.S. Treasuries with, I would say, an average maturity of, say, 60 to 90 days, and so they're very liquid. They're very easily redeemed for cash. And the way that the actual stablecoin mechanism works is that you do see minor deviations, from that $1, but arbitrageurs are able to, if the price of the stablecoin falls, say, to 99.5, they buy a bunch of those stablecoins, redeem them for dollars. The price goes above $1, 1.005. They'll mint a bunch of stablecoins and sell them into the market, and that's how those stablecoins maintain their $1 peg. But to get back to your question, yes, they are backed, and I think one of the main initiatives of any stablecoin bill is to bring clarity and some direction to, reporting and perhaps some reserve requirements for these stablecoin issuers.
So if I hold a stable coin in a wallet, and whoever those stable coins running, I guess they're running that stable coin, is investing them in treasury bills, do I get some sort of interest holding that stable coin?
Great question. So that is right, because now we're, now these are starting to look more like money market funds than actual, dollars, or perhaps you could call them tradable deposits. That is a big question right now that I think congressmen and women are debating over how to deal with interest. Because as it stands right now, you look at a company like Tether, and they have been absolutely crushing it. And that is because, stablecoin supply and the supply of Tether has continued to grow while interest rates have risen. And so their, interest on that margin that they're, or the margin on that interest that they're collecting is 100% right now. They're not passing that on to users. But there are some projects that are starting to rethink that. And there are some emerging stablecoin providers that are actually adopting that strategy. So I do think that we will see eventually stablecoins pass on issuance, but I think regulation is going to play a big role in terms of how common that is or is not.
If I issue a legitimate stablecoin and Tether pays nothing and I pay 1%, I should get, as long as I'm considered reliable, I should get, all the marginal dollars, right?
Right.
Do you want money or not? That's really interesting. I guess it's convenient for certainly in certain emerging markets, and maybe there's a tax issue if you move from coin to coin. It's not a transaction where where you move from coin to cash and then you use that cash to buy something else. I suppose a government could call it two transactions or two taxable transactions? I'm not a tax guy. I was just thinking about.
Yeah, I don't think I'm in a position to give tax advice right now. But that's a good point. If you were to convert those stable coins to cash, perhaps that would be taxable. And again, this is not tax advice. I'm just merely.
So the biggest stable coin is Tether, I guess?
Yes, Tether, USDT,
okay.
followed by USDC, which is issued by Circle.
Okay.
Yep.
And what do you think the total outstanding stablecoin extant right now would be, roughly?
The total market cap?
Yeah, market cap.
Yeah, it's I think it's close to 300 billion. It's probably around 280. I'd be able to check that pretty easily.
No,
but I think that's approximately that's around what it is.
Shifting gears a little bit, you mentioned something else that I wanted to I wanted to talk about. You mentioned meme coins. Can you give us sort of like that excellent explanation you just gave on stablecoin? Can you sort of explain the meme coin idea?
Yeah. So let's just approach this from an investor perspective. Meme coins, in my view, if you look at, say now I'm using quotes now, like the blue chip meme coins, say like a Doge. Mm-hmm. I view that as this perpetual call option on retail speculation. I think it has enough history where it does reliably outperform, a couple weeks a year, depending on the amount of retail speculation. So I do actually think that there is a world in which they have a place in one's crypto or global asset portfolio. Beyond that, once you get into the smaller cap meme coins, you're really talking about, a casino on chain where people are trying to bet on what will become a meme that has staying power, right? And I think we've seen a proliferation of meme coins for better or for worse over the past year. It's powered a lot of on-chain activity that we've seen this year, and look, it's pretty consistent with what we've seen in traditional markets, right? I mean, meme stocks have become a thing and they're still popular. Zero data expiry options have grown in popularity, especially amongst retail market participants. And, I haven't looked at their stock price, but I'm pretty sure, DraftKings is doing quite well, or at least their volumes are doing quite well. And that is because humans like to gamble, and crypto, decentralized rails, the ability to spin up a coin at low or no cost, that offers a new platform on which people can gamble. And so, I'm not here to moralize over whether that's good or bad. I'm just saying that is what it is, and it's that has been something that has proliferated over the past year or so. I do think we're probably reaching peak meme coin speculation. I think nation state leaders moving into meme coins perhaps poked a pin in that meme coin balloon. But the good news is, on the other side of that, I think you have a lot of people within crypto that are looking to projects that have good traction, good fundamentals, and now have the regulatory clarity, or will soon have the regulatory clarity they need to start accruing value to a token. I think historically you had, a regulatory regime that, put token issuers at a big risk if they wanted to, say, engage in programmatic buybacks or, give out yield to token holders. But I think over the next 12, 18 months, we're going to have a world in which these projects can actually engage in token buybacks or pass on yield, pass on revenues, earnings to tokens. and really create value around that token. We're already seeing some signs of that occurring, and so I'm not sure meme coins are ever going to go away, but I do think we probably hit peak meme coin degeneracy, and they are something you're going to want to continue to pay attention to, but I think it's also at the same time clearing a path for more legitimate use cases and fundamentally sound tokens to take their place to some extent.
So I guess just to take Doge, at least I've heard of Doge. My meme coin experience is a little lacking. But so Doge doesn't promise you anything. It's just a perpetual sort of asset, a perpetual call option, as you call it. So you buy it because you think it goes higher.
100%.
But it doesn't, there's no promise of any inter-exchangeability of anything.
Zero. No promises. That's kind of, it's almost the perk. That's almost the pitch, right?
Is there a limited number of Doge
just a cute
coins?
dog. No. In fact, it is highly inflationary from what I recall. I actually haven't looked at the emission schedule, but in a bit. But yeah,
I was reading, the president of Argentina got into trouble with it, and the Trump coin seems to have not done very well after initially. That's interesting, but as you say, hopefully you'll come up with other coins that actually have some, I guess, more value ultimately. This lesson.
Yeah, or value just tied to some level of utility, at the protocol level. And look, I'm not saying meme coins are a bad thing inherently. I think, I think there's a good way to do meme coins, right? I think there's perhaps even a quasi-social token element to it where perhaps everyone could have their own token, and it's a way to support someone monetarily by just buying their coin. There's a whole number of roads and thought experiments we could do around
meme coin
coins.
And GoFundMe, it's sort of
kind of
in a funny way. Now, I wanted to just get an idea of that because I think a lot of our viewers don't really understand, might not understand what that is, and thank you very much for that. So sure. I want to shift gears a little bit, and something that made headlines just recently: the Bybit hack. Apparently, the hackers were able to steal $1.5 billion worth of crypto. So I just want to sort of understand that a little bit better. I guess I don't know what coins were stolen, but if you had coins that have the blockchain and you have a history of every time this coin has changed hands, shouldn't you be able to prevent that coin that was illegally stolen from being able to transact? Or is that I'm not thinking about that correctly?
Yes and no. It's you can't. It's a token on a decentralized ledger, so you can't freeze those tokens unless there's something like stable coins, like a Tether, would actually be able to freeze, USDT tokens because they're a centralized issuer of this coin that they can track. What is a preventative measure that can take place is, if a hacker moves their coins onto an exchange, then those could be frozen, right? I guess it's important. I guess we should just talk about what these hackers are doing with those coins or what they did real quick.
Oh yeah, sure, please.
So it was a very sophisticated hack that had more to do with front-end software and general OPSEC than, let's say, crypto specifically. Essentially what they did is I'm going to try and put this in a very, very simple terms.
Please.
There were about 4 or 5 parties that had to approve a transaction in order to withdraw assets. And the hacker, who we now know as North Korea, was able to install malware that would change what those approvers saw when that withdrawal request was administered. And so what they saw was, I think, totally normal. But when they approved, they were really just approving a withdrawal of $1.5 billion in ETH to this North Korean hacker. Now, obviously, these funds have been tracked very closely, right? Because as you alluded to, they're on a decentralized ledger, an open ledger. And the way they go about, laundering these funds to use, in their day-to-day life is first they have to convert that ETH into Bitcoin, because Bitcoin just has a larger, more liquid OTC market that they would be able to exit into cash. And so they use, cross-chain swaps to do that. And what we've seen over the past couple of weeks is that, they've been able to do that to some extent, but it's been a little challenging because finding liquidity to make that transaction is tough. Because what happens is that if a liquidity provider, someone that is facilitating this transaction, interacts with this hacker, those funds, if they're withdrawn to an exchange, will be frozen forever, right? Because they interacted with a sanctioned regime. So that's one preventative measure, right? Just, administering penalties at the centralized level, right? But, unfortunately, there are ways to, eventually get that Bitcoin into cash. And I believe there are, liquid OTC markets that are, say in China or other North Korean, among other North Korean allies that will facilitate that transaction. And that's how it eventually happens. So there are ways to make it difficult, but it's tough to actually prevent that. The best way to prevent it is to just shore up OPSEC and market structure and really make sure that, that a hack like that doesn't happen in the first place, which...
So interesting. The way you've described it, it's as I guess the 1.5 was an ETH, was an Ethereum that was stolen. Yep. You'd actually they have to launder it,
right.
And you can't launder it. It can't go through an exchange because the exchange would see it and would see what was like. Now I guess the exchange knows what was stolen. They would never. If that went on exchange, the exchange would freeze it. Correct.
It's also interesting to note, they have to launder it, right? They have to use they have to use cash. Because cash isn't on an open ledger, and the only way to actually remit payments to a vendor or what have you is via cash. Otherwise, U.S. authorities would just be able to, continue to follow that ETH wherever it went, and that would obviously implicate whoever was transacting with them for whatever supplies or goods or services that they were actually buying. And so, it does kind of, in a sense, highlight the perks of an open ledger and the fact that there is like this ability to track illicit flows.
Right, that's fascinating. So I guess the people who've lost it have lost it, but the person who stole it may certainly not get the 1.5 billion out. There might be some small amount of that, and then I suppose you could use this ETH for private transactions and that off exchange, and then hopefully whoever you're receiving some goods or services for this ETH that is actually toxic. And then someday somebody tries to put it on and it'll freeze.
Yeah, that is what would happen. Yeah, so
is there any, and I'm just thinking, I don't know if it's out of the box or just actually very ordinary, but should there be before you exchange, you do an exchange in some kind of crypto, or at least in the main crypto, could there be a clearinghouse where you compare you check the coin before you transact?
That's interesting.
It would take some time. But
yeah. I mean, it's I don't know. That's an interesting thought. Perhaps, I think in terms of the number of illicit addresses out there, I don't know if it's too great of an issue at this point, but I wouldn't be surprised if
sort of like the IMEI on our cell phone. If I stole your cell phone and then I try to you reported it stolen, that IMEI would become, I think.
Yeah, is this account that I'm interacting with legit or not?
Right. Oh, just food for thought. The way
I like that.
You described it. Do you see that, sort of, I guess it's one of those where when there's a successful hack, it makes a lot of news, but there's probably a lot of attempted hacks that are not successful. Do you think overall the crypto world has gotten really a lot better at policing this sort of thing? Is it still safe for someone to keep their coins on an exchange rather than keeping their little drive?
Yeah, look, I think, let me just start with what I advocate for. I advocate for, diversifying custody, right? So one ideally shouldn't hold all their assets with one centralized exchange, nor should they hold them all in self-custody or all in a hot wallet. I think it's good to have, a diversity of custody tools. And then, in terms of how the industry has done, it does in the wake of what is probably the largest financial heist in world history. I think it was like the Central Bank of Iraq had $1 billion heist back in the day. I think this is probably, this supplants that. I know it's ridiculous to say, but I do think the industry has made a lot of strides around, OPSEC and preventing against, hacks, especially in DeFi. We've seen, the success rate and the actual number of funds, the amount of funds acquired by these hacking groups. We've seen that go down. Now, this was obviously a very different case, right? Because it was this large, profitable, centralized entity that was hacked. And normally the problems within crypto have more to do with, say like a multi-sig for a bridge or, a treasury, for a protocol getting hacked. But we've seen a lot less of that, based on the numbers that I last looked at. So I do think the industry is making strides, but obviously can always get better.
I want to take up all day here, and we started with Bitcoin. In some ways, I probably should end with it. I think I saw that you would, all things being equal, you had a Bitcoin forecast for a high of 175,000 in 2025. From what you've seen in the first couple of months, does that still remain your target? And also, where do you see ETH and Solana, which are some of the a couple of the other really big coins that a lot of people are involved in?
Yeah, I think so. I think base case. There's a lot of path dependency, right, with all of the variables around the trade war, and around Doge and fiscal constraints that we talked about earlier. But like I said, on the back end of that is greater adoption from traditional financial market participants. Perhaps we see some nation state adoption, state level adoption of Bitcoin. And so once things do turn around and liquidity improves, which I think it will, Bitcoin will be the fastest horse once again. And it doesn't take much to, say move back to that 150, 175K level, or move towards that 150, 175K level by the end of the year. And so, we're sticking with that target. And of course, we try to help clients, in along all time frames. So despite our tactical risk aversion for the next month or so, I think this setup is still pretty conducive for Bitcoin. Beyond that, I do favor Sol over ETH. I think Solana, we just moved through a period that obviously there were some macro headwinds, but in addition to that, there were some narrative headwinds around some meme coin launches that went south. I don't think that was the primary factor, but certainly contributed to it. In addition, we had a 2 billion unlock that, that's a lot of supply to introduce to the market. We just had that happen, over the past few days. And so, we moved beyond the bulk of the Sol unlocks for this year. So I think that is a positive. We're also going to have, a Sol ETF at some point, I think, over the next 12 months. We just got approved for CME futures, Solana CME futures, which is I think is massive. And so I still think the future is pretty bright for Solana, and would definitely favor owning that over ETH. ETH, I think, is still going through a bit of an identity crisis in terms of how it is marketed to clients. Just in the ETH ecosystem more broadly, I think has tugged and pulled between these concepts of trying to compete with Bitcoin and trying to compete with Solana, and throughout it all, they've kind of failed at both. And so that's why it's kind of been the it's been a tough asset to own, for the better part of the cycle. And I think what's going to have to happen is that we're going to have an environment where we see an incremental bid come in through traditional financial markets. And if you think about how traditional financial markets probably look at ETH as an asset, they probably just look at it as this unprofitable tech stock, which is probably directionally correct. And so I think we're going to have to enter an environment in which you see things like small caps and you see things like high growth, unprofitable tech start to outperform again. Which I think we could see on the back end of this trade war and growth scare. But until that happens, it's I think it's tough sledding for ETH.
Any price target for Sol or ETH for 25?
Yeah. Look, I think if we see things play out with Bitcoin, that we could achieve a price for Solana that's north of 500. ETH, I think, at best, I think we could see us revert to say like the 200-day moving average for ETH BTC, which would, I think, bring us to, around 6K.
A lot of happy folks at 6K.
Yeah, less conviction around the ETH price target,
right.
More so around Bitcoin and Solana, but yeah.
Great. Actually, one quick last question. These unlocks on Sol that you mentioned, do they happen periodically? Do you know when they're going to come?
Yeah. So that is all open source, and it is public. We put out a research note on that, and look, the thing you don't know is that you don't know who is going to sell and who is not. You don't know when that supply is coming to market. The way that a lot of this locked Solana was actually purchased was through FTX estate sales. So a lot of this locked Solana was actually, they were assets in the FTX bankruptcy. And so you actually had sales that were facilitated at a discount to spot. And I think the average acquisition price was probably around $75, $76. So what you had was a lot of funds purchase this Solana and hedge that. And you've actually seen that in funding rates over the past couple of months, where Solana funding rates have been decidedly negative as compared to ETH and Bitcoin, which haven't had those kind of need for hedges in derivatives markets. And we've already starting to see Solana funding rates pick back up and mirror the funding rate levels that we are seeing on ETH and Bitcoin. And so you can already see that the hedges have rolled off, and perhaps there's a little more supply to work through from these funds that are decidedly in the money from their purchases still, despite the drawdown. But beyond that, I think I think the concerns around this unlock, I think they'll be behind us sooner rather than later.
Excellent. Well, thank you so much for spending this time with us. Very educational for myself and for our viewers. We look forward to seeing you again.
Always a pleasure.